Hey, what's going on, guys? Just going to take a quick look at Hedera. Ticker for this is HBAR and currently on the weekly time frame. Now, I've looked at this coin probably at least 10 times so far, and in the previous videos, I kind of explained where I've marked out these levels. These levels are marked out based on the weekly time frame. So if you want to know exactly where I've marked these, I suggest that you go back and watch my previous videos. But actually, I'll just give you a brief, very quick overview. So we have this upsloping level of support here. You see how we have one, two, three, three touches on it, and then we had this downsloping level of resistance, right? The price is broken out of it, and more often than not, when you break a long-term level of resistance like this, the price will come back and retest it as a support, right? So you'll see that's exactly what happened right here. Now, I also have these three horizontal trend lines drawn on here. So this one is based, if you want to draw it, just paste it right here, the horizontal line right at the top of these candle bodies here. And if I zoom out and look to the left, you'll see that this level was a support, and right here was support again, right? So a lot of price history at this level. So if the price does make it back up here, if we break this horizontal line, then I anticipate that this level is going to be the next level of resistance, okay? And that's just under 9 cents, so 0.0883. Next horizontal line is right here. So if you want to draw that on your chart, I recommend just identifying this cluster right here and paste the horizontal line just below the candle bodies, right? So again, this is this line has a long history of being both a support and a resistance, right? So look right here, it was a support level. The price would wick down, but the candle bodies on the weekly time frame would close above it. Okay, so this was the level that was being defended. Once the price broke below, once we had a candle body break below this horizontal line, you'll see that it acted as a resistance level. So I'm going to zoom in here. So you see that, yeah, the price would come up during the week, but by the time the candle closed, bears would step in, and this level would be a rejection point, right? So here 1 month of consecutive trading right here, and then after that, the bulls just kind of ran out of gas, and the bears took over and sold it back down. And again, of course, just to highlight the importance of this level, this is exactly where, after being rejected from this horizontal line, we came all the way back down, and this level here served as the support, while the candle body actually closed above this midline. Okay, so a lot of history at these three levels. Okay, and of course this lower trend line was resistance all throughout here. It was support right here, support exactly where the wick of this candle came down. And yeah, just a lot of price history at that level as well. And that dates all the way back. If you want to draw this line on your chart, just identify the top of these two candle bodies and paste this horizontal trend line just above that. Okay, so actually I know I said I wasn't going to go over the levels again, but I just did. Okay, so but I tried to make it quick. So right now you'll see that this here, this lower horizontal trend line, this is the local resistance level from where we are, and the support level, as I mentioned, this downsloping level of resistance that we broke out of, that's a current level of support, but from where we are right now, it's going to be all the way down here, right? Now, before the price comes down here, we do have this upsloping level of support, and this is drawn based on the daily time frame, right? So I'm going to change it from the weekly to the daily, and I'll show you exactly how I've drawn this, okay? So back here, if you identify these candle bodies, so that's where I have this trend line started. And then kind of zooming out here, it was support right here as well. So these two candle bodies closed above it. And then again, once again, right here, these two candle bodies closing above it. So while I said that this is the local level of resistance, this upsloping trend line that now has three touches on it is the local level of support. So we're in a range right now. This is the upper level. This is the lower level of the range. So now that we've identified this, we can take trades based on where the price is in relation to these levels, right? So for example, if the price comes back down, you can anticipate that this level will hold as a support, and you could perhaps enter a long trade, and with the stop loss just below it, you can use this line as your backstop, and then you can either target the middle or you can target the upper range, right? Just depends on how confident you are in a trade. Now for me, if I enter down here on a retrace and I place my stop loss here, I would likely just use a little bit of leverage, and I would just pull profits at the midline, right? Because it's pretty annoying when you are in profit and the price comes back down and you lose your gains, right? A lot of the time, what I'll do, if the price comes to the midline, I'll just move my stop up. And yeah, if the price comes back down, I'll either get stopped out at a break even or at a slight profit, and then maybe I'll target this the top range. So that's another option. And likewise, if the price does come up to the top range here, that could potentially give you a short entry. So a short from there with the stop loss slightly above, and then you could target the midline or the lower region here. So I'm just gonna kind of map that out and show you what kind of R&R that would offer you if the opportunity presents itself. So let's take the short tool. And theoretically, if we were to enter, if the price comes up to this level of resistance, we would place a stop loss slightly above this resistance line and this previous wick. And if we just targeted the midline here, that would give us a risk reward ratio of over 1 to 6, so 1 to 6.14. We would risk only 1.29% to potentially get almost 8% if the price comes down, right? So very, very good trade setup there. And if the price doesn't make it all the way down to this lower region of support, that would give you a risk reward ratio of almost 1 to 10. So 1 to 9.71. Again, only risking 1.29% to potentially get 12.5% to the downside. So yeah, really good numbers here. Right now, we're just in this mid-range. So for me, this is a no trade zone. I'm going to wait for the price to either come down and take a buy off that, target the mid-range or this upper region, or if the price comes up here, pending some sort of bearish candle formation, I may look to enter a short with a stop loss just above this previous wick and this horizontal level. Now, if this level breaks, right, so if this upsloping level of support, again, based on the daily time frame and how these candle bodies close on the daily, if this level breaks, the next level of support I would look to would be, it would likely be, again, this down sloping level of resistance that we broke and we've already retested. So this level breaks, I'm going to look down to here. And then if this level breaks, then you do have this other upsloping level of support right here, okay? And that, of course, would be based on the weekly time frame, and this just long term, dating back to October of 2020. This long term support line is still intact. So if the worst happens and Bitcoin breaks down and these altcoins follow it, then you could look down here for a major. This is a major buy zone, but it's actually not too far off from where we are right now, right? We're just under 5 cents right now, and this support line currently would be about 4 cents, right? So again, not a huge distance down from where we currently are. About 20% drop, I would estimate, right? So hopefully that doesn't happen. Hopefully this upsloping level of support, again, based on the daily time frame, holds. And then, of course, yeah, this downsloping level of broken resistance could also be a support level. Now, if this upper target breaks, right, if we get a lot of momentum and a push through here, what I would look for is perhaps maybe a retest of it, and then I would target the next horizontal level right up here at slightly over 6 cents. So I've mapped out what a short position would look like here. Let's take the tool. Let's take the long tool. And let's take a look at what kind of gains we can get if we do start closing candle bodies above here. What I would look for ideally is a weekly candle body to close above this horizontal line, because again, this horizontal line is based on the weekly time frame, right? So candle body close above here, I would look to target this second horizontal resistance line. And let's take a look at what kind of R&R that would give us. So theoretically, if we were able to enter a trade right here, we can place a stop loss slightly below this horizontal level of what would then be a support, right? And then we would target this upper range right here. So this potential trade setup will give us R&R, a risk reward ratio of 1 to 3.5. So not as good as the other one I just showed you, right? But to me, it's still worth taking. We would be risking 2.88% to potentially get over 10% to the upside if the price did come up and hit this target. Anyway, that's just a quick overview on Hedera. Overall, this looks good. Let me take it back out to the weekly time frame. We've broken a long-term level of resistance, and right now we're just in the process of basically retesting it as a support, right? So consolidation after a breakout, a retest, and hopefully from here we start making our way back up. But again, if you want to trade Hedera, these are the levels that I would recommend drawing on your chart. And I just gave you a few examples of how you can potentially play it, right? So again, right now we are just kind of like in the middle of this range between the nearby resistance and the nearby level of support. So for me to enter a trade, As I mentioned, I need to be able to buy against the backstop. So for me to enter a short, I would buy against this. And for me to enter a long position, I would buy against this and then just place my stop loss slightly below here or slightly above here, right? So that's basically where we are on Hedera right now. If you found this video helpful, smash the like button. If you're not subscribed and you want to get notified when I release these videos in the future, click subscribe, click the bell, click on all. If you click away without doing that, you may have a hard time finding the channel again in the future, just because it's a new channel, as you can see, and there's only around 1,000 subscribers or so, and because of that, I'm not really prioritized in the search engine. Also, if you want an exchange to trade Hedera and pretty much any of the other coins I talk about on this channel, I put a link to 2 different exchanges in the pinned comment and the description. The first one's called Breakout. Really good exchange. I like it so far, but in a few days, they're going to start requiring KYC. Kind of figure a lot of you guys wouldn't be down with that, so I found an alternative. The alternative is called BingX, and if you click the link that I have in the pinned comment, go and then you'll see like a page, and they're offering some pretty good sign-up bonuses, right? So yeah, BingX does not require KYC, but for either of those exchanges, you may need a VPN to access them. So I also put a link to a VPN again in both the pinned comment and the description. All right, guys. Hopefully you found that helpful. Take care. Have a good day. Bye.